and welcome to the IPR podcast, where we discuss all things payments and remittances. I'm your host, Amir Abedi, CMO at Remit1, and I'm joined here by my esteemed colleague and great friend, Mr. Osama Sebati, who is the head of business solutions at Remit1 and a voice for technovation, technology and innovation in the remittance industry. So Osama, welcome. Thank you.
Thank you very much.
How are you?
Pleasure.
Thank you. So Osama, BBB, Big Beautiful Bill.
Indeed.
It was passed by the House of Representatives a few days ago in the US Congress. It includes, I think it's a 1,200-page document, and it includes various things. But what was relevant to us is the remittance component, where the bill proposes a 5%, I think, remittance tax.
Yeah.
How is that going to impact our money transfer industry?
Negatively. First of all, I think we need to understand who is going to impact the most. Now, if the remitter, the one sending the funds, he's going to absorb that 5% and pay 5% extra, that's one aspect of it, or he's going to send 5% less to his family.
Yeah.
In both cases, what we're looking at is a migrant worker who's migrated to the US to work and then send money to support his family back home. Now, 5% might not sound like a lot on the grand scheme of things, but if we talk about minimum wages, they're working sometimes physical menial jobs, and then they send a portion of that back to their families. Whether that be for family support, whether that be for education, whether that be for medical bills. That's going to decrease by 5%. So if he's passing it on to the beneficiary receives 5% less. Now, that could be a lot, right? Especially if you're paying a medical bill or if you're paying for education or anything like that. So you have to find some way to fulfill that 5%.
And also factor in the 4%, 5% drop in the dollar value since last year, in the last 6 months because of these trade wars. So that's like 10% now, roughly.
Yeah. So what's happening, just again, very, very, very high level with these trade wars, and what a trade war is basically applying a tax or a tariff on imported goods, which is usually a percentage of the goods value. Now, the thing is, if once you start these, let's call them trade wars, it makes the market very volatile. And I'm talking about the stock market. People, get wary of investing in certain safe havens, and that then has a knock-on effect on the currency value. So already we've lost 4 or 5%, and then now there's another 4 or 5%. That's 10%, which is a big hit. Especially again, we're talking about people sending money back to support their family and friends. Now, what this does is a few things can happen. It could drive the remitter to find alternative channels, non-legal channels, under-the-table channels to hawala, so to speak, or what it's called in the industry, to find ways of making that transfer. Because look, be under no illusion, right? You could charge what you like. The fact of the matter is remittances are still going to happen.
Money will still flow.
Money is still going to flow. Money will still cross border. People always find a way. It's a necessity.
Yep.
Yeah. And again, if there's a necessity, people will find a way. So what's happening in this case is that people are going to be driven to find alternative methods of making those payments, so they don't have to pay that 5% tax.
So all the hard work that the industry's done over the last 20 years in the United Nations, World Bank, IMF, central banks, regulators all around the world, trying to bring transactions from the informal remittance space to the formal space, that's going to waste, because now you're driving more people to go underground again.
Absolutely, it's counterproductive. So if we take a look at what was happening many years ago, where typically your compliance procedures would would consist of you having an Excel spreadsheet and manually checking things. Now, as you said, there's been a really hard drive to digitalize everything so that there is more visibility. Because if everything's digital, everything's centralized, there is ways of doing reporting. And now, when the regulators and central banks apply certain rules, and then we abide by them, then that opens up more doors, saying that, okay, look, you're compliant, now you can have these facilities, a bank account, or be able to operate, so on and so forth, which is great for inclusivity, right? So more people can receive their money, not just that, it becomes visible to them, right? So we can see that their checking transactions are not on a certain sanctions list or on a certain blacklist, right? Now, if I'm no longer using them formal channels because you've bumped the price high enough, which is unpalatable for me anymore, I'm going to then start taking informal channels, and again, all that hard work. I think it's counterproductive.
And I think, correct me if I'm wrong, but so according to the World Bank, the remittance industry globally is worth $700 billion through formal channels, $1 billion. The informal industry of money transfers is in excess of $2 trillion, according to some estimates. Average transaction value. So there are around 250 million migrants worldwide sending money back home. The ATV, the average transaction value, as I understand, is, according to the World Bank, is about $350.
Yeah.
Right? The largest corridor is from the US to Latin America as a whole. That's the biggest money flow, remittance corridor. That's going to be impacted first with the passing of this bill.
Yeah.
And that's going to, again, create more informal channels,
Of course.
to Mexico and other regions in Latin America.
Look, 10% of $350 is $35.
That's
5% of that is $17, almost $20. That's a large amount. It's what people generally would pay for a SWIFT transfer.
Yeah.
And the reason why people don't do SWIFT transfers is because the charges are high.
Exactly.
There's £20 to pay for that international transfer. So they go to your typical Western Union's, Ria's, MoneyGrams, whatever it is, because there's not that high charge. Now you're reapplying that high charge.
It's going to drive.
It's counterproductive, definitely.
So, what can the MTOs, money transfer operators, and fintechs potentially being affected by the 5% remittance tax do to survive now? And I mean, I suppose for the time being, it applies to the MTOs in the US, but there are other countries that are talking about applying a remittance tax as well. So it can potentially
the remittance tax absolutely applies to the US, but touching on again what we spoke about these trade wars that's going on, that impacts other countries as well. And so we're looking at the likes of China, India, the others that is obviously targeted, and again that could destabilize their currency to a degree as well. So what can the MTO do? The number one thing is to stay informed. Understand what's coming up, what's happening new, so that you can prepare yourself in advance. So that's the main thing. Don't be caught short, as they say. Right? It's already passed, and now I have to play catch up, and I'm running around trying to resolve this. Another main thing that MTOs can do is diversify. Okay, they need to diversify their products. Become like a super app. Which I'm sure you might have seen. There's quite a few out there at the moment. So for client retention and things like that. So no longer are you just relying on doing remittance for your income. You can also do bill payments, which fall outside of that, or mobile top up, or mobile money. It's still a type of remittance, so you still be probably hit with a tax. But then we've got other things like top up cards, like gift cards, which again fall outside of that regulation.
You can even extend it to prepaid cards, Netflix subscriptions.
Absolutely.
Because a lot of these receiving markets, you have a large population that doesn't have, let's say, a debit card or a Visa or a MasterCard.
So how do they subscribe?
Yeah. So all these solutions are, there are solutions out there in the market, actually, right? So for example, Remit1 does that. Remit1 is an end-to-end technology solutions provider. These MTOs can benefit from technology providers like Remit1 who have solutions to this, because what you're ensuring is the customer stickiness. You're ensuring that you're giving so many options to the remitter, the person sending money,
Absolutely.
that he or she would think twice before leaving the super app in question, and say, okay, I can send money still through underground channels, informal channels, I should say, but I don't want to because I'm getting all this other stuff from this super app. for example. So yeah, if you could elaborate on some
again,
of
guys,
this.
we're not endorsing any sort of untoward behaviour. It's not something that we endorse, making transactions in the informal.
Yeah,
Obviously,
exactly.
There's all sorts of issues with that. But yeah, you're absolutely right. Also, I think not just being prepared, understanding what's happening in the industry, having a super app with different types of payment methods in it, but also if you are, as you mentioned, partnering with a good software provider, or you have good partners, maybe that could reduce your cost and you can pass that saving on to your remitter. So let's just say this 5% has been applied, but however, my costs have dropped because I'm now partnering with this software company or this payment gateway or this payout partner. Then maybe I can pass those savings back on to the remitter, and he won't feel the sting as much.
Yes.
If he goes to one money transfer operator and he sees the rate is 5% better than the other money transfer operator, then he can obviously see the benefit to that. Oh, look, I'm already gaining that 5% that I would have lost because of this bill. So there's definitely things you can do. The other sort of issue with it going, or the government imposing these sort of taxes and these rules and regulations which push people underground is that once they become these transactions become under the table, let's say, the people who are running these sorts of organizations, these hawala, literally, I mean, look at US to Mexico, literally filling up a rucksack full of cash and walking it over the border. They're usually involved in other nefarious activities as well. It's not just their one business. They do probably human trafficking or drugs or X, Y, Z, and you're actually funding into that as well. Yeah. So that's definitely something that the authorities, government should reconsider. Trying to pull people back into the formal channels rather than making it more difficult for them to use it, I think.
Yeah. It's a very tricky situation in the industry, and but the solutions are out there, as you said. Absolutely. And there are many innovative solutions. You mentioned airtime, you mentioned prepaid cards, you mentioned subscriptions to eBay, Netflix, etc. All these things are available or possible through tech solution providers like Remit1 and others in the industry, which the MTOs can utilize to ensure customer stickiness, customer loyalty. Okay. And that's one way to solve the problem. The other thing I was just thinking about is, because the US dollar, let's say, so it's dropped in value, right? I mean, there are solutions where you can actually send money in stable coins. So, and that can help, I suppose, to some extent. So it's the actual money being moved is not the two currencies in question from the send country currency versus the receive country currency, but the movement is happening through stable coins. Or cryptocurrencies and etc. And the solutions are still there. These solutions are also available now in the market.
Absolutely. I would say the crypto more so than stablecoin.
Yeah, because stablecoin is pegged to the dollar.
Are going to be pegged to a dollar, so it's going to fluctuate with it, unfortunately. But yeah, I mean, lots of people are adopting crypto nowadays, but not only for the ease of use of making that cross-border transaction. It's not going through your SWIFT network or anything like that, or even API. It has its own network, which facilitates faster payments. But more and more people are accepting cryptocurrency as well as a receiving funds, and then converting that to local and then paying it out as well. So there's other avenues definitely that you can take to sort of mitigate some of this 5%.
The other thing, just very quickly, I'll just add, please correct me if I'm wrong, and please feel free to elaborate. But from a central bank's perspective, so in the US you have, is it FinCEN or FinTrack?
FinTrack Canada.
Sorry, FinCEN, yeah.
The US.
So the regulator is FinCEN, and FinCEN's objective is to track all payments coming in and leaving the country. And they can, if the objective is to track all transactions, inbound and outbound, and to generate revenue, instead of hitting the customers with a 5% remittance tax, they can actually use software like Remit1 to track all the remittances, inbound and outbound, cross-border payments, etc. And there's so much data that these software solution providers provide to these regulators that they can actually categorize them, and do sorts of, basically look at marketing activities, marketing to different segments that they can create from the data that they have, real-time data, and generate revenue in the form of taxes from other companies, corporates that are using their marketing data to sell products and services to these customers.
So just on the first point, right now the regulators are depending on the companies, the remitters, the MTOs, sorry, not the remitters, the MTOs, to report to them on a regular
Exactly.
basis.
Yeah.
So having a system in place where there's an API integration from that MTO system into this central bank system, now there's no manual need, right? Yeah. I'm not processing them, I'm just getting the transactional information every time a transaction is being done into my system, and I can see exactly who it's coming from. I can have my own processes as well on top of that. For example, if their system might not have flagged that a person's on a sanctions list, but they've real-time passed that transaction information to me, I might be able to
your system
flag it or understand it, right? So it's more of a centralized way, because things are moving in that direction. Everything's more technical, everything's more API driven. So why are we still relying on someone to email me once every 6 months or to put a file together for me in the format I want and send it to me, when I can have connections to that database automatically and get things in real time?
Real time, yes.
Some regulators have moved sort of towards that. Like if you look at Austrac as an example, they've got their own website, so you will have your own account, and you'll actually post your report.
That's Austrac in Australia.
In Australia, yep. And you'll actually post your report to that. I believe Saab do that.
Yeah,
South African Reserve Bank. They do that.
Yeah. And again, just to mention that technology solution providers like Remit1 and others, they do that as well. They have plugged into Saab, Austrac, Fintrac, and so on and so forth to send this data in at regular intervals, preset intervals, etc. So for the MTOs, if they want to diversify their product portfolio, their service portfolio, technology solutions exist. And for the central banks and regulators, again, for them, technology solutions exist in the market. So there's a lot of opportunities out there to stay on the right side of the law, staying compliant for MTOs, and generating revenue from customers whilst making it easy and cost effective for the customers as well, so that more ends up in the receiving side, and which in turn helps beneficiaries, the recipients of money in poor countries, to climb onto the financial ladder. And so these technology solutions exist to fulfill various business objectives, depending on which entity you are.
Absolutely, yeah. I agree.
Thank you very much, Osama. It was a pleasure having you. Thank you very much.
Thank you.
Take care. Bye-bye.